I'm Josh Daitch. I'm the Group Chief Investment Officer for ESR. We are the largest real asset manager in Asia with about $156 billion of AUM, focused on really new economy real estate, which logistics, cold storage, and data centers, big boxes. We're in 11 countries in Asia, representing about 95% of Asian GDP. So we're a big player in a big market, and it's kind of exciting day-to-day life for me. Well, I think in general is typically today investors are looking for a thematic, focus, and they're talking about beds and sheds. And these are secular trends in terms of housing and logistics that really are part of a global trend. We don't do beds, but we do sheds. And we're the largest developer of logistics across Asia, which is the largest and fastest growing market in the world, 4 to 5 times GDP growth than what's happening in the US and the EU. You've got the largest population in the world. Of the next billion middle class people in the world, 900 million of them are going to be Asian. So we're super excited about the future growth that's happening in Asia and playing into that trend of investing into logistics in the largest market globally. Well, there certainly is a ton of uncertainty today. The US political situation adds to this. And I think that investors in general, and ourselves included, have to be cautious. However, having said that, I think that we are kind of in an environment where the vintage year of 2025 and 2026 is poised to be very, very good. The interest rate heightening cycle globally has, I think, peaked, and we started to see cuts in the US, in Europe, and in many markets in Asia. Japan is a bit of an outlier there. But we think that now is really the time to be formulating capital. I'm not a big proponent of just deploying all the capital now, but for institutional investors, now's the time to be working with your trusted capital partners to set up your mandates so that you're prepared to take advantage of the pricing opportunities, because the bid-ask spread between buyers and sellers is really starting to close. And transactions volumes in Asia, for example, are up 28% from what they were last year. So ESG is really an important part of ESR's business. We're not a particularly clean business building real estate, but also we're in the data center business, which is very, very power hungry. But we are a signatory of UNPRI. We're a sector leader in GRESB ratings. We have 11 5-star ratings across Asia, and it's an important part of our future. We're also focused on building a new renewables business within ESR, because we really are the perfect off-taker for that renewable energy because of the data center business, and it's becoming holistic. I think that there is this kind of integration between where we are in logistics and data centers and infrastructure. And when you add renewables as part of that, it's kind of this Venn diagram of how we're looking at focusing the growth of the business into the future. Yeah, it's really interesting, and AI is, it's so nascent. Within our own firm, we started a co-pilot pilot program where 100 people were, issued with the AI to do test case, and we have a contest in terms of use cases of how to best utilize the technology, and that's going on right now. We, as the largest developer in Asia, we have almost 50 million square meters of space in Asia. So our own data set is so powerful in terms of rents, construction costs, yields, interest rates, et cetera. The ability to harness that data and do analytics and AI in terms of predictive location and analysis, I think is really powerful, but we're just scratching the surface. Well, I think Asia, obviously I'm pretty pro-Asia, but I think that fundamentally too, there are a lot of reasons why I should be bullish. One is, as I mentioned before, transaction volumes are up. I learned a long time ago, and when you've been in this business a long time, you see multiple cycles, that real estate pricing is really a function of two things. Physical supply and demand, is there too much space for the demand? And then 2, capital supply and demand. And over the last couple of years in Asia, in our sector, there's been too much supply and too little capital. And so developments have effectively gone down significantly. If you look at a market, for example, like Korea, where in Seoul, there's about 3 or 4 million square meters of excess capacity in the logistics space. But when you look at the construction starts and completions that are forecast for 2025, 26, 27, it's going off of a cliff, and that should all be absorbed in the next 18 months. So we think, again, that the next 2 years are going to be very, very interesting investment opportunities.